We go from there. Brilliant. So welcome everyone. Frgnt Mastery. I guess it's quarter one, the first week. As I said before, I'm not sure if anyone's traded, but I haven't. So you most certainly haven't missed out on any positions that I've been taking because I have taken absolutely none. So it's a good place to start. Let's see how the DXY is performing. Again, we're not using too much data on that weekly time frame. And as I said today, it's more of a general overview more so for myself as you've all experienced. It's a free call, so the more the merrier, and it's simply how I always trade, but it's more than likely going to take me a little bit longer than it has done previously, as yeah, I'm probably going to be a little bit fingers and toes. However, the thing that I can always fall back on is a very clear trading plan, and I'll simply mark my charts up in line with that. So it's never too complex. And on that weekly time frame, we always start and we just begin our top-down analysis. Now, for the Frgnt Mastery guys and girls, I know you've sent me some questions. I have answered them. But to be honest, I really wanted to get it in a nice video format for you all. So don't feel like I have ignored you, although I have. I have answered your questions. I simply haven't sent you the replies just yet. So if you do have any questions going through, feel free to ask, but be sure that your question will be answered at some point with a nice video. So as always say, weekly time frame, top-down analysis. In terms of structure, I'm not concerned. My go-to is how is the most recent weekly candles performing? Do we have, for example, any highs in the market that we can look to isolate? Potentially, if I move this over here, any lows in the market that price could well come down to. And of course, based on basic smart money concepts, blimey, almost even forgot that, we will look for reaction once we've got some confirmation from those areas. Again, as I mentioned, always that weekly 50 EMA. So regardless of it being a new year, I do still expect the weekly 50 EMA to act as a dynamic support and resistance for us all. And we can see in this element that price was just trending, or the weekly 50 EMA was trending in and around price. And with that said, we didn't get any real clear directional bias. What we've then had, what we can see is a breakdown below that weekly 50 EMA, and price has now seemingly come up towards that weekly 50 EMA, and we've had that rejection down. So that's all good news. So in terms of the DXY, then what we could expect is two outcomes. We can expect price to start to trend back up to that weekly 50 EMA before then naturally we'd be looking for a rejection down. However, with that said, we'll simply still have to try and isolate some areas in the market because I highly doubt that price on the DXY is going to free fall down to these areas to our left. There must be some areas to our left where we can look for a nice trading range if we were just simply going to trade that DXY. So I'll look to the left simply to find some order blocks at the absolute lows where we can say it's quite unlikely that price is going to get down there anytime soon. However, if price does get down there, we will indeed be ready with our market analysis. So that's a weekly order block, and we'll have that showing as always on all time frames. So in the here and now, what can we have a look at? Anything in the absolute high. So first of all, as I do on all pairs, I'm going to be marking that in regards to a wick imbalance on that weekly time frame. Why is that important? Because you would have heard me say rather throughout the entirety of last year that we can always presume that wicks look to get filled. So if price comes up into this area, although we do not have any candles to be set to say per se, we do have a wick. So once there is going to be a change of structure in and around that area, then of course we would, if we are going to trade the DXY, which we're not. However, just to get a basic direction of that DXY in terms of where price could look to turn over, that would help us trade GU, EU, AU for good example. So the wick imbalance is of course highlighted. Then at these absolute lows, we can say we have another wick imbalance, again in the opposite direction, where price could look to find some support before potentially turning around. So with that said, we simply have a nice trading range. What isn't uncommon on the weekly time frame is we don't always have weekly order blocks. However, we can see here towards those highs and lows, we've got a weekly order block here and a weekly order block at the bottom. And with that said, there are no further In fact, mistaken. Time out the markets. The eyes go a little bit less sharper, but you can see there is a weekly order block there. So a nice question that I hear you ask, when and why do you select certain order blocks? If it makes sense, the order block will be selected. Now, the reason why this order block I'd be comfortable with trading it is because we've got that weekly 50 EMA there. With the weekly 50 EMA there, if we revert back to what I said maybe 5 minutes ago, we're expecting rejection from that weekly 50 EMA. However, we don't just trade from 50 EMAs. We look to build the bias and then trade from that once we're confident in our analysis. So straight away, we will highlight the fact that the weekly 50 EMA there is there. And we also have a weekly order block, which is the highest degree of order block that we'd be looking to trade from. Then again, as I'm sure you will expect me to say, we're not going to be trading from a weekly order block because that order block is simply far too large in terms of range. So we'll be looking to refine that area down. With that said, we'll also be looking to highlight this area up the top also, refine that wick imbalance down. We're more than likely going to see a 15-minute order block up at these highs that has given us a nice break of structure to the lows. And then once price comes back into that area, we'll be looking for confirmation before a potential short on that DXY. And exactly the same down at these lows. So with that said, that for me is the weekly time frame completed. And I'm just going to have this showing on all intervals so we won't have to revisit it. And as we go down through the time frames, we hope and we could almost guarantee that our areas that we have now selected simply from this basic analysis on that weekly time frame, that on the daily, 4 hour, and even the 15-minute, these elements should align with the lower time frame. So as long as we know where we are in regards to the higher time frames and our intermediate 50 EMAs, trading becomes a lot easier in regards to trading in a clean direction. So let's head down to the daily time frame and see where our areas align if they do. So weekly done daily. Right. So the first thing we'll be looking for is the areas that we've highlighted. Can we see any order blocks in and around that area for us to start building our bias? So straight away, that wick imbalance on that weekly time frame is lining up perfectly with a daily order block. So we're just going to highlight that daily order block, superimpose that across all time frames, have it big enough across, and ensure it's going to be visible once we go down to the lower time frames. Right, again, why is that an area? Well, we've highlighted on the weekly. Does it make sense that an order block is there? Absolutely. For now, there is a daily order block which caused a break of structure to the left. It's as simple as that. Do not overcomplicate it when we are on the higher time frames. Again, in regards to trend, I'm not concerned about the weekly or the daily. If it's obvious, fair enough, we'll take it into account. If it's not, we're simply looking at most basic candlestick formations and order blocks. In fact, let's get rid of the term candlestick formations. We're simply looking to see whether our higher time frame points of interest aligns with order blocks as we start to go down. Once we reach that 4 hour time frame, it's at that point we start to look at the direction of the market to look for a higher time frame point, a higher time frame trade rather. So daily order block down at the lows, we're going to be looking to refine that area to ultimately look for a long from this area. And we do know that our higher probable short position is going to come from a rejection from that weekly 50 EMA. That's clear. So we've got the weekly order block there, and it's our job to see if we can refine that down. Now, I always say, look to short from as high as you possibly can. And when you're taking longs, look to long from the low in the market. Very common and basic sense. So we found a daily order block up at those highs. Again, why? It simply makes sense for now. We're refining our higher time frame points of interest down. Now, this area here, the wick imbalance that we had labeled from that weekly imbalance, we can't see that there are any order blocks in and around the area. But what we can see is at some point there certainly was a very large daily order block there. However, that order block has been mitigated, and that is a reason why after that move, which created the wick, we have now had a break of structure to the lows. Just taking everything into consideration. Unfortunately, there isn't an order block in and around that area. So we'll simply get rid of that. And as we look to go down through the time frames, I would expect, as I said before, a 15-minute order block, or as we go down to the four, perhaps there is a 4 hour order block in and around this area again. But what you can see is as you start to stack the confluence, you can quite quickly identify the positions that you'd be more comfortable to take. So for me, I already know if I'm going to short the DXY, or forget about this being the DXY, this could be any pair whatsoever. If you are going to take a position, for me, based on the fact that I've got rejection from the weekly 50 EMA, I'm trading from a higher time frame weekly order block, and I've refined that down to a daily order block that is there available, not, and it hasn't been mitigated. For me, straight away, I already know simply from weekly and daily that my higher time frame point of my higher time frame, excuse me, my highest probable trade is going to come from that short position. With that said, it of course does not discount any other positions. It might just mean that we're going to have to await a more rigid type of confirmation before looking to take perhaps this long position in comparison to this short. While we're here, we'll also look at this daily 50 EMA and see how price is respecting it. So bear with me as I go back to finding bits and bobs. Daily 50 EMA, right. What's the significance? Okay, so previously, price, if I zoom out for you all, can just see that price was even, let's go here, for example. Price had broken above that daily 50 May, come down, didn't really come into the area to retest it, but most certainly we can see that price, as it broke above that daily 50 May, it indeed remained above that daily 50 May until we had a significant break below, and then price did exactly what we expect in the other direction to retest it. It's gone and it's come back. Here is a fine example of the daily 50 MA being rejected, and then off it's gone again to make a lower low. It's unfortunate at this element that it broke above. However, in the here and now, let's see what we're working with. So the daily 50 MA is above price action. So why that's good in terms of the short? Well, we've got the daily 50 MA that price could look to come and retest before going short. But what that means in terms of our higher probable setup as well is that within a day, let's say for good example, that price trends up to this area. So not only are you or are we going to expect that this or the blimey, it has been a long time. Not only are we going to expect that the daily 50 MA is going to be rejected, we also have the added element and confluence that we also expect the weekly 50 MA to be rejected as well. So when you are going to be looking to take a short position from this area, you can have the full confidence, so long as it's within the current day where price has previously closed below that daily 50 EMA, we can expect quite comfortably that we are going to get a rejection not only from the weekly but also from the daily, and we're going to expect that price is going to close below that daily 50 MA. Just a general oversight for those of you that are here in the Frgnt Mastery. Of course, I will go into a lot more depth around the EMA to solve any confusion. But as you can see, price is comfortably trending below and we're rejecting, trending below and rejecting. So we are going to expect that if not only price comes up to this area, if there is a short position available, then of course, once we have confirmation on the lower time frames, then absolutely we'll take that position. But what I'm saying also is if price comes up to this area within the same day, then this is absolutely a valid position, because not only are you expecting the rejection from the 50, you are also expecting a rejection from the daily. So the candle is going to look something along these lines at some point. As it starts printing, you might get a quick rejection off the daily there. It starts to push up, and let's say you've got 12 hours remaining left of this daily candle, comes up to that 50 EMA, and it looks to be rejected. So although the candle may well close like this for the end of, let's say, a Tuesday, you have the confidence that you would be expecting a rejection from that daily 50 MA. So I'll leave that as that for now and move on. So the question is, so would we take a position from the daily 50 MA? Absolutely. If the stars align and there's some order blocks in and around that area, then absolutely we would be looking to take a position from that. So as you can see, in and around the daily 50 MA to be exact, there isn't an order block there. But what we're happy to see is above that daily 50 EMA, there is indeed a daily order block. Now, that doesn't mean because I've said sell from the absolute highs, we cannot take this. It simply means, well, currently we don't have higher time frame confluence in terms of the weekly to look to take this position. But once we start to refine this current daily order block, perhaps there is going to be a 4 hour order block within this area, and then we can start building up our confidence from that. And once we have our entry criteria sorted, be happy to take a short position down. And as I've just mentioned previously, we'll be trading alongside that daily 50 EMA also. So a good illustration of that. Let me darken this up so you can all see it clearly. Um, Remind me not to take this long off trading again because it's no, don't want to be doing that. No, that's still not any visible background. That's what we're looking for. Right, so use your imagination. This is a daily candle. Once the price comes up into that daily, we are, of course, expecting a rejection from the daily 50 EMA. But as we know, daily candles, they do leave wicks. So what we're going to be expecting is, let's say price starts to breach that daily 50 EMA to the highs. It comes up to our refined daily order block. And then by the end of the day, we're expecting the candle to close like so. And what that is going to look like is a wick to the high, and that will be our daily candle close with our entry in and around these areas. And for sure, we wouldn't need to wait for the daily candle to be closed before looking to take profits. So that's the analysis on that daily 50 EMA. So what we want to be doing is looking to refine these areas as we start to go down through the lower time frame. So we've got order blocks refined, 50 EMAs on the chart, daily order blocks to the low as well. In and around these lows there, and I hope you can see now the comparison. So let's say, for good example, there is most definitely a daily order block here. The problem that we have is that is simply a daily order block. We have no reason to place that order block in and around the area. Just because we have had a hold up in price from that, that doesn't necessarily validate this daily order block. Let's say, for good example, if price did in fact take off from that area, then of course this an order block that is left behind, we would then validate that by saying, well, based on market structure, we have an area in which price broke structure and it's left an order block behind. But for now, as you can see, simply looking to the left, it's simply just an order block with no higher time frame bias in terms of in terms of weekly order blocks, daily or 50 EMA. So hope that's a nice example of why you do not just select any old order block in the middle of nowhere simply because price is reacting from it. All what's going on here is lower lows, lower highs, lower lows, lower highs, lower lows, and lower highs. We don't have any valid reason to be looking to take a long position from that area at this time. Down to the 4 hour. I hope everything is there waiting for us. And as it is, so the 4 hour, if I refresh my own mind, that is where I start to pay careful attention to trend. Let me just put in this daily order block, do one thing at a time so I'm not confusing myself as well as you all. So 4 hour 50 EMA, we'll come back to that soon. What we can see here is, if I zoom out, the first thing we'll pay careful attention to is trade and price action and basic structure. So from here, we can say price was very clearly making higher highs and higher lows up until this area. Now, what we can say is, and always, I do not take into all of this price action into consideration. I'm more concerned in, as I switch on my chart, what can I see? If I have to start zooming across, that simply means that once price gets into an area and there is no refined order block, I simply have to start building my foundations again. I'm not going to start relying on price action all the way from last year in terms of refinements, really down from if we say lower than the 15-minute time frame. I'm not interested. I need to start building those foundations up again. So with that said, we can still look to see if we have any 4 hour order blocks in our already refined areas so we can start building the picture up. And as you can see from the top, we've got that weekly order block, just to refresh you, weekly 50 MA where we're expecting a rejection. We've refined this weekly order block down to the highs where we want to be looking for short positions. Now, within that daily order block, what do we have? We're now looking to isolate areas even smaller. We can see right here that there is a 4 hour order block just there. So what I'll do, highlight that, give it its name, increase the length of it, and make sure that it's showing on the 15-minute time frame for us once we get down there. Grand. So we've got that there. Also, the fact that we highlighted a daily order block in and around this area, that pairs up very nicely indeed with the daily 50 MA, of which we'll be looking for rejection. And then once I put that in, we'll then inspect price action to see how that makes sense in terms of the trend. Right. So basic structure, lower low, lower high, lower low created. So we are searching for a lower high, wherever it may be, before looking for a lower low continuation. Now, something that I've most definitely learned coming into the latter stages of last year is not to discredit. So if I were to draw basic price action out for you, so we say lower low, lower high, lower low. So as a result of this lower high is now confirmed. We don't want it looking like that. Sorry, everyone. Will most definitely speed up towards the end of the quarter. Right. So this lower low is confirmed as a result of this lower high, or rather, this lower high is confirmed as a result of this lower low. Now, what's important to gauge is if price was to come up above a confirmed lower high, that is not necessarily a break of structure for you to be looking for that in the opposite direction. What that means and where we are currently means that we are still searching for confirmation of another lower low. Now, the only way that we will get a confirmation of another lower low is if we isolate an area in the market, wait for the confirmation, and allow it to have the opportunity to make a lower low. So the point that I'm making is although a lower low was created from, let's say, without giving it an order block from and around this area, it doesn't discredit the fact that we'll be looking for trades from this area. And that's simply because we have refined this area now above it. So what I'm saying is, although we have an order block here, which has most certainly caused the lower low based on price action, not always to take a position like this in the immediacy because we're taking into consideration price action, lower low, lower high, coming back into an area that price has made a lower low from, you would still require a high degree of confirmation from this area because it is only a 4 hour order block alongside price action. Using smart money concepts, it's our job to look for points of interest first. Then we take into consideration price action and structure secondary. So this is if I were to say, right, I've got one trade to take, I can take whichever trade I want and price will get there. I would much rather take, if I'm going to compare the two of these positions, I'd much rather take this position here as opposed to this position because we have a refined daily order block that price has not come into and tapped before. So we know that with that daily order block above, price is going to be wanting to look to mitigate that daily order block, even if it is just to tap it ever so slightly, leave us a wick into that 4 hour. Hopefully, there's a 15-minute before then going in our direction. However, with this position here, if there were an Asia range, let's say in and around the area, then of course that will start to add confluence to that position. But just because it's an order block aligning with chart structure, that doesn't mean that this position is something that we need to be jumping into straight away. Now, I know this is a DXY, but I figured just looking at it briefly this afternoon, that it paints a really nice picture just in terms of the candlesticks and the formations, and it's allowing me to really, I suppose, explain the basics of the strategy quite easily based on just how price action is moving on that DXY. So this position isn't discounted, but if you were to say, right, I'm only going to be looking for a higher probable setup today, it would be this position and also this position. And this position you'd be looking for a little bit more. And let's say going to the 15-minute time frame, you would want to see, let's say, price to the left here. If I'm going to draw this, clearly we have on the 15-minute quite clear lower lows and lower highs. But what you'd want to see is price come up to that area, give you something else, and then you'd be looking to take the position short. So you'd want to see a break of where am I? Break of most recent structure, then coming back up into that area before looking to take a position from this area. Now, what's important to recognize is just based on my drawing that this area here is something that has maybe caused more of the move on that higher time frame. What you can see is this is clearly lower low, lower high on that higher time frame, and price is coming back into that area before making a potential lower low on that higher time frame. So it's very important going into this year not to be jumping into positions just because it looks okay. Do a little bit more, and I've gone through my positions over the last couple of weeks, probably around 200 to 300 positions. And it's just a common theme that I've seen. Perhaps I would discredit this and really try to hone in on this position, but it's important to recognize what's above. And the key role of smart money concepts is to look for those high probable points of interest first and foremost. Then, secondly, you then start to pay attention to structure. As we did to begin with, I wasn't concerned about structure on the weekly. I wasn't concerned about structure on the daily, but the 4 hour time frame is where I start to pay attention to structure. But what we must understand is the first element of smart money concepts is that of looking for high probable points of interest, and we start to refine them down. Now, why that's important is because if I'm going to discredit everything that I've done already, then I may as well have not even bothered looking at the weekly and the daily. I may as well have just gone to the 4 hour, looked at price action, looked how structure was aligning, place a 4 hour order block in there, and just start trading from there. But that's completely incorrect. We need to look for a higher probable setup first and foremost, look for those areas, and let's say price comes into this area. Of course, we'll be looking to take the position, but we have to understand that this is not a higher probable setup in comparison to those above. Now, I hope that makes sense. I understand I'm going through it pretty quickly, but I hope you can gain sort of the crux of what I'm saying. So this is a nice area nevertheless based on structure, but it's simply at the minute, it's a 4 hour order book that's caused a snap in the market, and that's all that it is. Now, with that said, it's nice to know there is a daily order block sat above that. So these two areas are very much so valid points of interest that we'll be looking to take. But the difference is how we'll be looking to trade those positions. And that's what's in mastery, where I'll be going into the differences and how you would be aggressive here. And perhaps here you'd be looking for a lot more, as I've drawn out previously, some 15-minute breaks of structure. Whereas in this area, we might just be looking for a 15-minute bearish candle. So that's the difference. Structure breaks, simply a bearish candle, a pullback into imbalance. Lower time frame break of structure will be looking to take this position almost immediately. Just 15 minutes is what we're going to have to wait. However, this position here, it could be you might have to wait an hour to 2 hours for price to actually start to develop on that 15-minute time frame. Look for the 15 minute to start breaking areas, then come back, and then it's our 15 minute style of candle entry of the lower time frame breaks of structure. So that will be the difference that I'm certainly going to be looking to emphasize going into the new year, simply based on what I've looked through of my own performance. Right, so that's enough waffling there. That is the 4 hour time frame. So let me just to see if I have missed anything. Certainly from the lows, haven't identified a refinement just yet. So we start from as low as possible. And of course, we have that wick, which is most unlikely that there is going to be, well, there isn't a 4 hour order block in and around that area. But what that means is once price gets down to this area, if I address that first of all in the lower time frames, it doesn't mean we're looking to take immediate long positions from here. What it means is we then have to wait for our formation or our foundations to be created. Then once we're satisfied that we have that, we'll look to then isolate 15-minute order blocks. Let's have a look. 15-minute. Oh, it's not going to show. Oh, it should do. There we go. We'll be looking to then isolate 15-minute order blocks. Perhaps from that area, we'll have a bullish 15-minute, excuse me, a bullish 4 hour candle alongside that. And when price gives us that bullish 4 hour candle compared against other 4 hour candles that had been previously printed, we then have the confirmation that, okay, price is now ready to take off. So we'd have, for a good example, a break of structure on the 4 hour, based on this bullish 4 hour engulfing candle. We'd then be looking to highlight that order block left behind, and then we'd be looking to refine that down just as we have previously. So in and around those lows, a wick imbalance. If there isn't anything there, we're waiting for formation to be created. Then once we're satisfied, we'll be looking to take a long position up to those highs. So that's how we're going to be looking to attack those wick imbalances. But for now, let's take a bit of a look to see if there is any 4 hour order blocks available in and around that area first and foremost. And if not, then this is exactly what we're going to be having to look for. Now, I know it's on the DXY, but take it as any pair. Candlesticks are candlesticks regardless of the pair, and strategy is not adjusted per cross pair. It could be the DXY, it could be gold, it could be GU, AU, EG. It does not matter whatsoever. So, hope you're all still with me. Where are we? So 4 hour order blocks. Now, again, we don't want to fall in a trap of simply selecting order blocks just because they're available. So let's start from the bottom to see what there is. There's absolutely nothing here. There indeed was a 4 hour order block in and around this area, but as you can see, it's already been mitigated by that wick and price has flown up, come back down, and off it's gone again. So at this moment, as I look to the left, there is no 4 hour order block. So what I'm not going to do is just put one in for the sake of it. I'm going to have to wait. And I'll be waiting for price to come into this daily order block, perhaps tap into this wick imbalance, and then we'll be looking for price to give us our entry criteria. Let's say if this pair was GU, that's exactly what we'll be looking for before looking for a long position. So it's very clear where we'll be looking to take immediate positions from, and it's very clear the positions that I'll be looking to have to wait for. So that makes the game of trading a lot simpler, simply knowing that no long positions until prices come into this area, and I've got at least, well, 3 opportunities for potential shorts. If price comes back up to that area, I'll be looking to take that almost immediately whilst covering the highs. Price comes into this area, then it's going to be a sort of a 15-minute candle, lower time frame break of structure. And then if price comes into this other area here, which is not my higher probable point of interest, then I'll be looking for potentially a 15-minute pattern complete break, pull back into imbalance, and then I'll be looking to short from that point onwards. Now, I think we've done most of the work there on the 4 hour. And then simply what you can say is the way that I'm happy to look to take this trade now based on structure is that simply that price was making higher highs and higher lows, and price is quite clearly starting to break structures to those lows. And you'll simply put a break of structure in, just like so. So now we have the confidence that we'll now be trading alongside intraday price action. So down to the 15-minute. And now what we hope, just for the cherry on top of the cake, is as we start to refine those areas down, we can look to see and identify 15-minute order blocks in and around those areas. Now let's have a look to see what we have. Let's start with the wick imbalance, get rid of that, potential long. Let's see if there is anything in and around that area, just for good measure. So that's what we drew. We'll get rid of that for now. Over to the left, anything whatsoever on the DXY. Cool, nice. So that makes our position a lot easier in terms of where are we going to be looking to take a long position from. There's a 15-minute order block there. Let's call it what it is. Let's make it larger, drag it across the chart and see where we lie. So that's a hell of a way away. But nevertheless, it's a nice practical to show you how you must be patient once you've done the work. See, I can't zoom across anymore on a 32-inch screen. So that just shows how you must be patient once you've done your analysis. And again, the DXY seem to throw up a lot of good examples of how we need to be trading, or if it's not so much you guys, how I most definitely need to be trading, and I can lead that by example for you to follow suit if you feel to do so. But for me, it's quite clearly now that there are going to be no long positions until this area is tapped into, unless something absolutely incredible happens on the DXY and all our short position structures are broken to those highs, then price comes back into a lower time, an area left behind before taking a long from a position. But at this precise moment, we haven't refined any areas to look for long positions other than those lows. So it's as simple as that. So let's have a look about what we can look for in regards to, blimey, I am all fingers and toes. 15. Good. So let's see our refined areas and see what we have in our, not our worst position, but out of the three, it most certainly is a position that is going to require a little bit more in terms of entry criteria. And let's see what we have. So we've got an Asia range up here that has not been filled. So straight away, if we are going to find any order blocks within this area, and it's quite nice there isn't one. So what we are going to have to do is the fact that within our refined area there, let me just double check before I call that facts. Yeah, blimey, that was easy. Here's one. And this would be a message to you all as well. If you're feeling a little bit slower in the markets, and I've got to admit, I've not taken this long out of trading before in terms of, what's that, 3 weeks. That's completely normal. What we're doing, it's a profession. You know, if you don't go to work for a long period of time, it feels slightly foreign once you return, right? If you're young enough or your memory is good enough to remember going back to school after 6 weeks of holiday, most of the guys would forget how to write in boarding school. So um, just don't worry too much if you're feeling a little bit slower. It's completely normal and it's to be expected. But what that means is have more of a time of speculation before execution. Be sure that your analysis makes sense first and foremost. If you're feeling any element of doubt, maybe sit out for a while. For sure, I won't hesitate in terms of saying, right, I'm unsure at this precise moment. So until my trading mind starts to align more and I feel more in flow with the market, perhaps I'll sit out, place an imaginary trade just like this, or place a position on a very low risk just to see if my bias will play out. Then once you start to feel more comfortable in the markets and you feel like, right, my eye is now in, even if you're into sports, a cricketer, if he comes to the wicket, he doesn't start swinging right away. He'll take a few shots. He'll play a few shots, as I should say, and then once his eye is in, it's at that point he'll start applying power to the shot. So it's the same with us as trading. We'll wait for our setup, we'll mark our setup, we'll mark it out, we'll see how it plays out. Not so much the result, but the execution itself. We're not result driven. We're simply based on execution and trying to get the execution nailed on. Once you can relax and just execute with no hesitation, trading becomes incredibly easy. May I be a good example of that? So what we have here, me stop waffling, 15-minute order block within that area. That's good news. But again, if we start to pay attention to price action, we can see that in the most recency, if I were to refer that back to how it was previously. Oh, where are we? Bear with me, guys. We don't want a border. That should do it. We'll give it that. Where are we? Background. That's more like it. Grand. So remember I said from this position, it's not a bad position, but there are no higher time frame points of interest, such as a weekly order block, such as a daily order block. We simply began with a 4 hour order block as a result of price action dictating that 4 hour order block. Now, what I said is from that area, we'd really look to, before taking a position, we'd want to see 15-minute structure tell us that we're ready to go short. So this position here that I've highlighted is really suggesting that, right, you don't necessarily have to wait for these lows to be broken before then you look, if I draw it, you don't necessarily have to wait for this area to be broken, then price come back into that area before taking the short. But what I mean is, if price comes into this area, There is no reason currently for me to be looking for a short. What I'd be happier to do, or what I will be definitely doing going into Monday, let's say if this is GU for good example, I want to see if price, blimey, can provide me with a reaction and start breaking some forms of previous structure. Once that's done, and I always preach this, you don't need to be the first person in the trade. Most definitely don't be the last, but you can be second, third, fourth. And by the fifth time, price is more than likely changing direction. So don't be the last. But most certainly, I don't need to be the first person to short this come Monday morning. But what I do would like, or what I will require to see is some structure points on that 15-minute broken first and foremost before I look to take a sell. So you'll say, but Charles, this 15-minute order block will then be mitigated. Well, absolutely. Once price comes into that area and mitigates that 15-minute order block, then we will simply get rid of it and hope that as a result of, let's say, if I draw it, comes down. Then we say, well, as a result of price breaking structure, more often than not, we'll have a 15-minute order block left up there at those highs anyway for us to look to manipulate and then take a short down. So that is how going into Monday, I'm going to be a lot more comfortable in terms of risking my position. Sorry, guys, I'm just going to pause you here. My dog is going bananas. So just a moment, I will pause the recording for a split second. Sorry, everyone. Of course, my dog always finds it best to start going crazy when I'm on a call. So, nevertheless, I hope that makes sense in terms of why I don't need to be the first person to take this position here. However, I'm happy to wait for price to break and then price come into that area, and then I'll be more than happy to take this aggressively because now we have had the signs that price is willing to push from that area. But at this moment, price isn't doing anything. And if you were to look and start reading price action, basically higher highs, higher lows, higher highs, higher lows, higher highs, and price hasn't made a higher high from that area. So simply put, we'll just call it like so, and we won't be forward into the market in terms of breakout positions short or doing anything else in between. So let me answer some of these questions if they're coming up in the chat. Okay, cool. Brilliant. So I hope that makes sense. Now, how would I be looking to attack the higher time frame or the better looking position that I'd be more willing to take aggressively? So we know we're up in these areas. We know what we're playing with. In fact, as well as that, before I go over that, to pay attention to the 50 EMAs. Now, again, I'm stressing the fact I understand this is on the DXY, but it doesn't matter. It's the same across all pairs. So if we pay careful attention to that 4-hour 50 EMA, so without going to the 4-hour time frame, you can see that price in the most recent 4-hour candle has closed above that 4-hour 50 EMA. Let me just double check that actually. Yes, it has. Good. I haven't forgotten everything. So prices close above that 4-hour 50 EMA. So we know that price on that 4-hour time frame is looking to come down and reject that 50 EMA. So why would it then make more sense to wait for a break of structure? Now, what would happen? I mean, a break of structure south. What would happen then if we did get a break of structure on that 15-minute time frame? This would indeed then be a break below the 4-hour 50 EMA, meaning because the most recent candle was closed below that 50 EMA, instead of expecting price to come down to the 4-hour 50 EMA and reject it, as is currently, if we get this scenario, then the inverse is then what we are to expect. We would then expect, as a result of candle closure there, we would then expect price to pull back into that 50 EMA, potentially then tap into this area within a 4-hour candle, and then we'd be trading alongside the 4-hour 50 EMA. We'd also have the added element of the daily 50 EMA would start to come down as well by the time that happened, we'd like to imagine. And this is just how you start to build the full picture, right? So if I just quickly jump to that 4 hour time frame for you to get a nice example of what's happening currently. So price has closed above that 4 out of 50 EMA. So my explanation was currently we're going to take a position. Here is where you'd have to get out the market, or you'd be forced to manage your position by this time because you'd expect rejection. Now, what we are forecasting is that, okay, on the 15-minute, we're waiting for a significant break below structure on that 15-minute time frame. What that would look like on the 4 hour is exactly this. The 4 hour candle closure and the 4 hour candle closure below that 4 hour 50 EMA. Now, let's say the candle then closes, that would be a requirement. Price would then, the next 4 hour candle we'd expect after that's closed, open, price could then trend back up to this area. More than likely to happen. More often than not, that's what happens. Now, once we gain our entry from this area, and we'd say we've got 2.5 hours left of this current 4 hour candle that's being printed, all what would happen is as we would enter, we like to forecast and like to imagine that a wick would be established to those highs, and the candle should, or based on our theory, close below that 4 hour 50 EMA. By the time that candle would close anyway, we'd be more than out the market with 3%. So that's how I will be, or that's how I have always looked at my analysis in terms of forward, well, it's just forecasting or forward anticipation of the better types of setup. So regardless of it being a break of structure on the 15, that's great. But if we could also get that 4 hour candle closure below that 4 hour 50 EMA, allow us to then trade alongside that 4 hour 50 MA, as you can see, is very powerful. Prices come into the area, it's rejected, come into the area, rejected. Then it's broken above, had a little bit of hold up, but then it's now rejected, broken above, and rejected. So we're just going to rinse and repeat history on that 4 hour 50 MA. So just a little theory, which does make up, I'd say, a high percentage of my trading criteria. Not only is it good to be trading alongside the EMAs, but if you are trading towards them, then that will establish quite clear targets for you as well. So if I'm going to look to take a position here at this position, this would be my target, the 4 hour 50 EMA. So if I draw the 15-minute structure like so, price comes in. If the 4 hour candle has not broken below, then of course I would be having to get out of the market by that 4 hour 50 MA because I'm expecting that, right? So that's that. Now the 15 minutes, head back to there, see how we can analyze the higher probable setup up at these highs. Now, we're having to scroll a little bit of a way back to look for that 15-minute, but that's not the end of the world. Let's see what there is because we're not going to be jumping into this position in the immediacy anyway. It's very rare that we take positions on a tap, and if we are going to be taking positions on a tap entry, for example, it would have to be from a session high or an ultimate low, as this isn't at the moment. So, what can we see for now? 15-minute order block is what we are trying to identify within our higher time frame points of interest. So let's start up at these highs. So nothing there of any interest. We start to come down. That is valid. Cool. So that's very nice. We're in the equilibrium of the daily, as you can see by that white line. We're towards the equilibrium of the 4 hour as well. Now, it's not something that I am strict on trading from the equilibrium, but if you are to look up smart money concepts, more often than not, they do say, or it is explained, that if you are able to take a position from the equilibrium of an order block, then word on the street is that it would increase your chance of at least price pushing towards at least going break even. So we're happy to see that. But as I said, it's not the be all and end all of my strategy, which is simplified. So 15-minute order block, all intervals, of course, and we'll bring that across and see where that lays or lies, I should say. Let's get rid of that. We're up at these highs. Now, I can tell, well, you can see for now that prices are way away from that area, and that's fine. Let's say this is GU, you've got it, or it's the DXY, so there's no problem. Price at some point is going to get there, and the plan of action is how you're going to be looking to enter that market. Now, for me personally, because I have had to select an order block from all the way back then, I am not going to be taking this aggressive, but most certainly it's going to be more aggressive than this. As you've seen me explain, I need to see significant breaks of structure before looking to take that position short. I'm not going to have to look to await for significant breaks of structure to take this position. Let's see price is trending up nicely like so. I'm not necessarily going to have to look for that to be broken and then pull back into an area of interest. But what I am most certainly going to have to see from that area is a 15-minute candle closure, bearish engulfing candle closure. Even better if it is, or if the candle allows me to have a wick to the high, even better, because that is going to indicate selling pressure coming from that area. And you can see just based on the stacked layers of confluence daily, 4 hour, 15-minute, it's an area where I want to be trading. Now, again, I don't need to be the first in that position, but most certainly I'll look to get in at second or third. So if price comes into that area, I'll be waiting for a candle formation in something in and around like so, which is explained for it in Frgnt Mastery. And then once price comes up into that area, I'll be looking for price to fill that wick. More often than not, there's going to be a 5 or 1 minute order block left up at those highs. I can either look to isolate that lower time frame order block like so. Where are we? Lower time frame order block and take a position like that. Or more often than not, if I am at the charts and I'm not away, and I don't need to set a limit order, I could look for that added cherry on top of the cake, or strawberries if that's what you're into. 1 minute break of structure again, and then I'll be looking to take that position down. Now, the difference that we have is, let's say for good example, the 4 hour candle that we were explaining had not closed below that. That's fine. The fact that I'm now trading from or selling from the highs allows me a better range to that 4 hour 50 EMA, where I'm then expecting a reversal, or not so much a reversal, some rejection from that 4 hour 50 EMA. So that increases my range quite dramatically in comparison to this position. We then have that. So that's why you can see, just based on it was in the immediacy, just the weekly and daily, we were looking to weekly, daily, and 4 hour, we could already perceive the higher probable setup that we'd be more willing to take. And based on that, we have two separate entry criterias, one of which is more patient, one of which tells us that price is now ready to turn around, one of which we're happy to take based on the analysis that we've already done, and price and the trade is pretty much there waiting for us. That's the difference. So here, the trade isn't really waiting for us, but here you can see it's already there. We're just going to need to wait for some certain elements to align before then we'll take that quite confidently. So I hope that makes sense in terms of the difference. Then at the top, up at these highs, if I zoom out just to gauge myself, where are we? So weekly 4 hour, 15-minute. So we've got some wicks to those highs. So if I go to, I just minimize this quickly, everyone, type in weekly there. Where are we? We're here. 15. Good. And we were looking around this area. Grand. So what do we have in around that area? Just look to the left to see if there is anything there up at those highs. Here, there isn't. So we start to move along. Anything there, that's mitigated. So as I said, we want to look to take the position from the work that we've already done. And there is a 15-minute order block just there. Cool. So this is the type of position that I'd more often than not be a lot more aggressive on, because it's simply the last place that I can look to take a position from. So with that said, let me just double check what we're trading along with. So it should be the weekly. Why is that weekly 50 MA not showing up? Let's type that back in there. It's a hell of a way away, but we'll get there. Bear with me, team. Cool. To be honest, it's probably better illustrated with all of the time frames up. So let's put the weekly back up so we can see where we are. Cool. So we're looking in and around this area. Got the daily time frame in the middle. Again, up at those highs here. And let's select that 4 hour. Good. Just a little bit higher in and around that area. So the aim of the game here really is, as I've just said, it's the last case scenario of a good position to sell from. Again, it doesn't necessarily mean you start taking that on a limit order because as you can see to those highs, there are areas that price could look to reach up into. However, with that said, if your stop loss is able to, let me have a look, cover the reasons why you could lose. And again, knowing that you're in the best position for the short at this stage, trading alongside rejection from that weekly 50 MA, where for some reason just can't get that to be shown. Here we are, definitely in that position. Cool. So if you're able to cover elements in which that you, let's say, if we use the term fearful or reasons why you could potentially lose that position, though, because more often than not, I implore you to trust your order blocks, but you got to be smart. Now, that's a 15-minute order block refined within the four. So technically you could say, right, well, I can cover the daily order block. But if you are to take a stop loss here based on a few pips of you just covering those ultimate highs, then it would make sense, first of all, to reanalyze your stop loss first and foremost. And then you're having to look at where your targets are. So where is that 4 hour 50 EMA? That will paint a really nice picture for us. So daily is higher than that 4 hour 50 minute, which is grand. So if we start to mark out a really nice range of where you'd be looking to take your targets down to, I'm sorry I'm having to zoom out, but it's a really nice example of three types of positions where your trade style and trade management will differ. Okay, so there's the weekly 50 minutes. That's the highest type of confidence that you want to be looking to take a position from. Weekly 50 MA, not to say guaranteed rejection, but just look at that. Price came in, rejected on the weekly here. Price come into that area, rejected. So if price comes back in, pretty solid high chance that price is going to reject from that area. So knowing that we're in that area, we then want to find and look towards your target. So let's say for good example, price is trending above that daily 50 MA, and it's more often than not that by the time price does get to this weekly 50 MA, you will be then trading towards the 4 hour and the daily 50 MA before anticipating a rejection. But what that means is your take profit then goes to an area like so, meaning that this degree of stop loss is quite manageable because to get almost 5% risk to reward ratio on a particular trade is pretty easy going. That allows your position a very good amount of breathing room as well. Also, the fact that you're able to cover the weekly order block, and technically, we don't really anticipate price to go higher than that weekly order block anyway. But just in case there are any, which there most certainly will be lower time frame order blocks within these 15-minute candles that are yet to be mitigated, you're even able to cover those as well. So, in terms of an entry setup for that, it would be for me a very I'm sorry I have to do this without current price action there, but it's just easier to show here. So from this area, it would be a more aggressive entry style criteria. And what that would be, if I draw it out for you, let's say price is trending up here on the 1 minute time frame is what I'll be looking at. Trending in very gently, price breaks, pulls back, and it's a very easy sell. So long as that break that is created allows me to locate a lower time frame 1 minute order block just like so. For me, that's a bread and butter positional trade and one that I take 100 times out of 100, regardless of the result, which I can certainly guarantee you will be positive if you are to take your positions with that level of discipline from higher time frame points of interest. So just to recap on that, as you can see, we've refined areas down from the weekly. We've used the weekly 50 EMA. We've refined that area down. We found a daily order block in and around that area. So if I delete that, you can see quite clear there is a daily order block there at those highs, allowing us to sell from as high as possible. We've refined that daily order block down to the 4 hour and 15, and that's still not good enough for us. We're still going to be looking to wait for a lower time for a break of structure on that 1 minute, await a 1 minute order block to be created before then taking a position from this area, like so, for good example. Now, that wouldn't be wrong. That wouldn't be wrong, excuse me, but you have to ask yourself, what's smart? That's smart based on the fact that your targets are going to be down towards the most approaching daily fit or most approaching 50 EMA that is working against you. Now we can already anticipate if price gets up into the if price gets up into those areas, that price on the daily would definitely have broken and closed above that daily 50 MA. So you would almost certainly have to be trading back towards that AMA before expecting a rejection from it. So that's fine. We know we've got a good enough range down to that daily 50 MA. So it's not a case of let's try and go for some home runs. If we bring that down to the daily, there's no need to look for 1 to 10s at the moment. Start taking smart positions that make sense in terms of your stop loss placement. And as long as you can aim for a 1 to 3, that would be the go-to for me personally as I look to start the month and start the quarter rolling. So 1 to 3 is minimum. Any less than that, then I'm not interested. Let's say I had to have my stop loss up here to cover the highs, then I know that this position is not for me. It would mean I'd have to move everything up, wait for that to occur, and then have be comfortable enough to take a position from a solid foundation, much of which that we would explain that much of which that I explained how we would take the long position here. If there is no foundation already there, you wait for your foundation to be set and then you simply trade from them. So that is, I hope not too long-winded, but I just looked over the DXY and I thought, what a nice example of being patient enough to wait for the higher probable long position. And just because you can't take a long position doesn't mean we can't take any other positions simply because they're not higher probability. You've got a position here that also makes sense, but it hasn't been refined. We've started from the 4 hour. So the fact that we start from the 4 hour, as I've explained, just going to see a little bit more before looking to enter from this area. Now, again, secondary position, nice area. Entry criteria differs ever so slightly. And again, from the top, very nice area, trading alongside higher probable points of interest. And because it's the last case scenario or the last position where we'd be looking to take a short from, it's at that point you can be aggressive in your entry style and criteria. So I hope that made sense for the majority. And what I'll do, as I know I've rabbited across that quite a lot, and I appreciate your time, I'll go across a pair that I know is blank. Um, well, that's to GU, the most traded pair in the world. So you'll be able to vet me here to see if I'm doing everything as I've previously stated in the same manner. So I'll clear the chart, start from the weekly, and we'll simply start to build that setup all the way back up. And I'll simply do it with a bit less chit chatter so you can all follow along. So we'll remove all the drawings and we'll start again from that weekly. And then I'll promise to let you all enjoy your Saturday. So, not bothered about structure. I'm firstly bothered about that weekly 50 EMA. We'll pop that in. Most recent candles, highs and lows. Wick imbalances, if any. Doesn't make sense now. As you go down through the time frames, it should. Any order blocks to work with. Previously mitigated, have it to one side. Just for a good example of price working alongside that 50 EMA. Down at the rear, nothing there, but for what it's worth in 6 months' time, we'll put that there. So let me just double check myself. Quick, no weekly order blocks. Session high for sure. Good, that makes sense. Order block, no. Order block, yes. Why does that make sense? Well, the weekly 50 EMA is there. Nothing more needs to be said. Cool. So higher time frame or higher probable setup, what I'd be looking for, most certainly would be a short from these lows. Refined downs. We know once this is refined, probably going to be down towards the bottom here. That's fine. We know we've already explained what we'd be looking for previously. Then up at these highs, there are no order blocks. So currently we're working with wicks and hope that as we start to refine those areas down, it's going to make sense. That's the goal. All intervals, all intervals. I mean, they used to show on all intervals, but let's just double check. All intervals. Grand. Daily, we start the top-down analysis. First of all, we look in and around our areas. Can we refine? Not before popping on that daily 50 EMA. Start from the lows. So far, why does that make sense? The only reason this order block makes sense is because it's refined within the daily 50 EMA, excuse me, the weekly order block. Now, I'm interested in this one also because that aligns quite nicely with the date weekly 50 EMA. As I said, there are no real rules, but you want to start selecting order blocks that really make sense. Now, what do we have? We've got an order block there at those wick at that first wick imbalance. Good. And anything around the highs. So that's already mitigated, but as you can see, that wick was created and it left it, or rather, this candle created an order block on that daily time frame, where as a result of, sorry to go on, but if it makes sense, I'll speak about it. As a result of this candle or this price action, this break or strut to the left, pull back into an area of imbalance. If you were to set a position there, it's quite easy from that daily order block as price came into that area. That just supports the strategy, which is good to see in a new year. Cool, where are we? So there's nothing there in terms of the highs. Already been mitigated there. We've got that one on here. So we'll have to start building from the 4 hour for this top wick imbalance. If I bring that over just slightly. Good, nothing there. Something there. Here, what do we have? For me, this would be a session high. So I can't imagine there are going to be any order blocks in and around that area. They've already been mitigated on the 4 hour. There'll be nothing here on, excuse me, daily. There'll be nothing here on the 4 hour. So probably it's going to start here on the 15 minute. Let's see if there's anything around this daily 50 MA just to add some complications in. And why would I want to do that? So daily, and it is available. So put it in for now. So it's looking quite crowded. But as you go down through the time frames, we'll be able to get rid of what doesn't make sense. But for now, we certainly have daily order block, daily 50 EMA, weekly order block, weekly 50 EMA, weekly order block. Within, we've got a daily order block and a daily order block. So ultimately, I always say I like, or it's my If I had a dream scenario, it would be to long from the lows and short from the highs. Now, this obviously presents us with a bit of a mixed feeling, but we take the facts on board and it is what it is for now. So, does that make sense at this time? Price is broken above the daily 50 EMA, expecting a rejection from that daily 50 EMA. If price starts to breach that daily 50 EMA, pops into the weekly 50 EMA as well as the daily order block, expect a rejection from there and down at these lows, and that would be my higher probable long position as I am longing from the low. So it's quite clear for me at the moment if I'm going to be disciplined the positions that I'd be looking to take in the immediacy. Now, how that's going to make my decision making process a lot easier is I'll go down to the 4 hour and see about structure as well as 4 hour order blocks. So let's start from the lows. Do we have any 4 hour order blocks to start building the picture up? Negative at these lows, they've all been mitigated. So at this time, probably only going to be a 15-minute order block, which is going to be down at these lows, which is not the end of the world. It just means that we're going to have to wait for a higher probable setup, and there's no problem in doing so. We have a 4 hour order block just here that I shall indeed highlight, call it what it is, extend it, and be happy that it's there. Cool. Now this area here, kind of our nearly area. Do we have any order blocks in and around that area? So daily order block within the negative, it's been mitigated. Let me show you that for good illustration. The only 4 hour order block that was available is here, and it's been tapped. So I've got to get rid of it. So now, very clear. Again, like on the DXY, it's very clear what I have to look to see. In this area, I can't be aggressive. I've only got a daily order block and a daily 50 MA. In this rear area, I can be more aggressive than in this position because, as you've seen, you can see that the confluence is very clearly stacked in and around that area. It doesn't mean immediate buys, absolutely not, but it means I most certainly don't have to wait for, let me paint a good example. Since there is no 15-minute order block here for me, excuse me, 4 hour order block. In fact, let's go down to the 15, then I'll make up that mind. Where are we? Cool. So let me just bring up my other time frames. Weekly, daily, four, cool. 4 hour order block, 15 minute. So let's start at these lows. In fact, let's start at this area. It's much easier. Cool. Let's look to the left to see within that daily, see if we've got a 15-minute order block at all that we can start to look to work with. Okay, let's start from the lows. No, mitigated, mitigated. I mean here, mitigated. So we move along, and there's one there. Good. 15. Nice. Let's have a look, see how that lies. Cool. So it's not a bad area. Up at those highs, nothing there. Let's look at the long position since that's more realistic to the here and now. Now, in this lower area, see what we have? Weekly, daily, within the daily towards the lows. Ideal scenario, long from the lows. Cool. Now let's enlarge that, done some good work. All right. Sorry to zoom out, just gets the picture better for me. Cool. So area one, or rather flip that, area one, area two, area three. Let's have a look at our higher probable position, which would be a long from the lows. Cool. So in this area, you can already see where we have a problem. Not a problem, it's an observation. put it in. More than likely going to be a wick of some sort on a higher time frame. But nevertheless, let's go back to what we do best and look in and around. So nothing here available. Cool. We were here. Oh, there we go. Grand. So that's the chart analysis marked up on all higher time frames, top down and in front of us. Now, the decision that we have is, do we get rid of any areas? If not, how do we plan to take a long position from those areas? So, again, we start from our easiest type of setup. So, in regards to the higher probable setup, it of course is going to be a long from these lows. Now, the fact that I'd want to be aggressive from this area is going to be difficult for me simply because I know that there is an area below that price will look to gravitate towards. Now, this is where having two types of strategies within your trading arsenal is quite helpful because knowing that you can Asia range as well as look for directional positions is very nice indeed. Instead of me scrolling, let me go back to that. So we know higher probable setup is going to come from our higher probable or higher time frame order block. So we know, let me just pop this on here for ours, all order blocks or all intervals. All intervals. Cool. So that's how our chart is shaping up on the weekly. So, as we mentioned, this 15-minute order block right at the bottom, right at the lows, that is a wick here on the weekly time frame. So it's unlikely that price is going to get down there, but most certainly if price does get down to these absolute lows here, then it's going to be a very aggressive type of position because as we mentioned the DXY short, we know if we're going to take a long position from here, we've had ample opportunity to take long positions, and here is going to be the position or the place in which we'll be anticipating a reaction for us to at least look to go break even. You then ask yourself, why do I come to that conclusion? Well, if you zoom out as far as you possibly can from this area, price had an almighty move, and that move has left behind a 15-minute order block. Now, it's not refined down in any of the areas, but what you could say is once these areas start to become breached, we could still see a rejection from that area with a wick, especially because these areas are daily and weekly order blocks. So what we would see is something like this. So if I enlarge the bottom right hand chart for you, what you would see, let's say that price, if I'm to draw that weekly candle now and price starts to come all the way down into these lower areas, and then we'll be looking to take a long position. Our goal is to look to get to break even in the immediacy. Now, what would that look like? Well, that would look on the weekly when that weekly candle closes, close of business Friday, you're going to have a wick to the low and your candle would be closing here. But what we are going to expect is price to close above that weekly 50 MA, leaving a wick like so. So absolutely here at the lows is going to be our most higher probable point of interest and setup. So here it's going to be a very aggressive type of entry. Now, if we compare that whilst I have you all on here and I appreciate your time to a position we could say in the middle of nowhere. We've got a daily 50 EMA, a daily order block, and we've simply been able to refine that down to a 15-minute. Now, for me personally, knowing that price has from that area broken structure to the left, I am quite comfortable to wait for a position here and not necessarily wait for a break of those highs and then come down. No, I'm not going to wait for all the stars in the sky to align before taking that. But what I am going to have to see from that area is, let me come to a conclusion now. So ultimately, I'd love to see an Asia range printed as well to the lows here. And then how that's going to look is as price starts to trend down, here we would have our perfect Asia range setup. So as well as having an Asia range, you can, although Asia range is a standalone trading strategy based on the 15-minute and the 1 minute only, what this type of position would be a directional position based on higher time frame confluence and smart money concepts, and we would use Asia range to be filled as a confluence. So it wouldn't be the fact that I would have to wait for tremendous amounts of confirmation before taking that long. If I have an Asia range position, then absolutely I'm looking to take this almost immediately. Nevertheless, if an Asia range isn't going to be present, then that slightly changes the setup. Of course, I can't take this immediately. It's just a 15-minute order block in a refined daily order block. So what I am going to see, or what I am going to anticipate, is price is going to hover around for a moment. And if price will give me those subtle breaks of structure, understood, I've drawn it to quite an idealistic degree. It's not going to be like that, but at least I can see that price starts to trickle down and starts to create structure on the way down. And what I am going to want to see is a structure point on that 15-minute broken. What that would leave me with is, and the guys again, guys and girls in Frgnt Mastery would know that once price breaks up on the 15-minute, of course, I am going to have a bullish crusted. What was that? Oh, was that someone drawing the chart? Okay, nevertheless, what that is going to look like, it's going to be more than a bullish 15-minute candle closure. So I know that I've not been completely as aggressive as I could be in lower areas, but I would want to do something as simple as this. Isolate an area where we have had a break of structure on that 15 minutes. So again, I already know from this position I'm not going to be the first in, and that's absolutely fine because based on the fact that this isn't my higher probable area, and in the back of my mind it could be something along those lines. So what I would need to do is wait for some structure breaks, not towards the highs, but in the immediacy. Once that structure break occurs, then of course I expect a 15-minute order block to be left behind. So I'd be looking to delete that, shuffle across, and have an order block there. Now, once price comes back down to this area, then I've got the decision. Should I be aggressive on the 1 minute and take the position like so? Or do I again wait for the icing on top of the cake, which would be a bullish 15-minute candle, which again would leave me with another order block towards the lows, wait for price to come back in, and then I'll take the position like that. So that would be a lot of overkill. What I would be waiting for is at least a structure break on the 15-minute, leave me with a 15-minute order block. And then what I would do is understand that if there is a 1 minute order block refined in that area, then I'll be looking to take my position from that 1 minute order block. If we go lower time frame in and around this area like so. Let me widen it so it makes a bit more sense. So let's say there's a 15-minute, and at the rear you have a 1 minute order block. So once price comes back down into that 1 minute order block, then absolutely I will be aggressive, waiting for a 1 minute time frame break of structure, pullback, and a long position will be taken. So that would be the absolute difference. So here again, I hope you can understand that just because you do the analysis, it doesn't mean it's time to enter. It's all about your entry criteria and how you execute that entry criteria. So I've gone over the sort of the more type of immediate entry, and in this element, it is an immediate position, but it is not an immediate entry. Still have to wait for something simply based on the fact that price action is going to be incredibly bearish as it gets here. But one to remember is your EMAs. You're being supported by that daily 50 EMA, and it's one that we have to pay careful attention to because price is trending beautifully above that daily 50 EMA. So in the center chart, as price comes back down, I'm expecting rejection from it. And I hope that that rejection will allow me to at least push my position to break even. Job done. All right, guys, so I won't keep you for any longer. I appreciate you've all been joining me now for an hour and a half on a Saturday evening. But I'll all implore you to take a look at your charts in that degree of depth before you look to execute on Monday. And even for me, if I'm feeling a little bit slow, not in flow of the markets, I'll just observe. And there's absolutely nothing wrong with doing that. As I say, once you've been away from work for a long period of time, you don't just jump in all guns blazing to begin with. Might lower my risk, might simply just set some positions or mark the charts and see how I would look to manage that in real time. There's no rush. 4 quarters away is a long period of time for us to be back a year from now. So there's no need to start rushing into positions. blowing accounts, making needless trading errors. And yeah, I'll leave you at that. So thank you all for joining me. The members that are in Frgnt Mastery, we will have a very in-depth call tomorrow going over all the charts. They'll already be marked. So be prepared to discuss entry criterias come Monday morning. So have your charts ready and we'll get right into how we're going to be looking into Asia range positions come Monday, especially looking at GU. It's one that I'm very excited to. I can already forecast if there's an Asia range there, it's going to be a pretty much an immediate long position straight away on GU. But again, it's all upon strict criteria and that Asia range actually being where we forecast it to be. So again, everyone, I appreciate you're all here, all at different stages, but I hope that you were able to gauge at least something out of that, whether it's how we respect the weekly, daily 50 EMAs, the 4 hour EMAs, expect the rejection from that as price flips and closes in a direction from it, how your bias now must change in terms of rejection from the opposite direction, and how we look to use those EMAs as targets as well. And also, although we went over the DXY, I hope you can gauge that there are certain levels of where you can be aggressive and where you must await a higher degree of entry criteria. And I'll leave you with just because you do your analysis and there is an order block there, that isn't enough for you then to take a position. More often than not, you need an entry criteria before taking that position. The analogy for me always goes back to if you're looking to lose weight, it's all well and good buying a salad, but it depends how you put that salad into food, right? If you put your salad in a burger, you're still eating a salad, but that's not your way to weight loss. You need to eat the salad alone. So we do the work and we come up with better analogies in 2026. So thank you all for joining me. Michael, Andrea, I see iPhone and Ian. I appreciate you all here. Denise is also here. Crusted Circle, great name. And Victor, appreciate you all for joining me. I'll speak to you all soon. All the very best. Good luck in your trading journey 2026. It should be an easy one. All the best, everyone. Take care.